Let's begin first of all by laying out the picture of the outlook for the cement industry in Africa. Is it good? Is it bad?
Currently, outlook for the sector, definitely positive. Main reason being there's been definitely a deficit of infrastructure within the region. And we're seeing most of the governments actually pushing their budgets, targeting development expenditure. So yes, for the cement industry, positive outlook.
So let's talk numbers here. What kind of growth potential are we talking about? And just how big in terms of capacity is needed here?
Currently, in terms of growth figures, East Africa in particular, we're talking about consumption of per capita of about 70. Which is way below what other emerging markets are doing. So probably half of what most of the other emerging markets are doing. In terms of capital expenditure in the industry, we've seen quite a bit of capacity coming online over the last 2 years. Within East Africa, we've seen about 30% of new capacity within the last 18 months. Then we expect an additional about 40% over the next 2 years. So yes, the industry definitely does see the potential, and capacity is coming on.
So let's talk about the growth rates then. Let's talk perhaps for 2011. I don't know what kind of figures you would have around you, just in terms of the expected growth of the industry overall in East Africa. What sort of percentages are we talking about?
2011, again, looking at what we did in 2010. 2010 in East Africa, estimates that are coming through is we did about 12 to 13% growth in consumption. And steady consumption is expected in 2011, given that most of the projects that were commenced in 2010 are still spilling over to 2011. So the estimate for 2011 still remains within the range of 12% to 13% growth in consumption.
And what kind of outlook do you see in the years ahead? Do you see that growth being maintained in double digits?
As it looks, yes. Again, citing the low consumption per capita, and given what the various governments are doing in terms of focus of development expenditure. From that perspective, yes, the consumption is likely to remain above double digit. Again, mainly because within the East Africa region, we are seeing economic forecast in terms of GDP growth remaining above 5% over the next number of years. And what we know is that the cement industry is estimated to grow by about 2 times GDP growth.
So let's talk about, let's break it down then into numbers. I mean, one of the most lasting impressions that one gets when they travel to East Africa is the poor states of the roads. And that picture is pretty much even across the region. If you talk Tanzania, if you talk Uganda, if you're talking Kenya, the biggest economy in the region, we do know that infrastructure remains a big bottleneck. Where are the deficits? Where are the biggest growth opportunities?
Biggest growth opportunity remains initially from government-led expenditure. So as you mentioned, a significant road deficit within the region. But for the cement industry, what we expect beyond government-led infrastructure is your individual private home builder. Because as roads come up, that means you're developing satellite towns outside the major cities that are already developed with buildings. And they already have the necessary infrastructure. So as roads come up, we expect significant demand to come from private individuals who are setting up their premises outside the main cities that you have within East Africa.
Yeah. Francis, I'm thinking here there might be an investor who's listening tonight and thinking, oh, East Africa is the land opportunity. If you're looking at cement demand growing in double digits, surely it's a place to be. But in terms of countries, where would that be? Would you pick Tanzania? Would you pick Rwanda? Or would you just go straight and stay in Kenya?
Fastest growing market in East Africa, excluding Rwanda and Burundi, because figures are not readily available for those 2 markets.
Okay.
In terms of consumption, is Tanzania currently. Over the last 2 years, consumption in Tanzania has averaged about 15%.
And Kenya?
Kenya, not left behind, but close with about 13-14%.
And in terms of competition within the industry, I mean, we spoke earlier about the competition that came from imports. What about within the region itself? How is competition? Are you seeing the entry of some of the big boys coming into that market?
Definitely. And even if we ignore the big boys, if I look at the cement industry within East Africa, 2 years ago, key players, we only had 5 key players. Currently, we have about 8 players. Within the next 3 years, we expect to have about 11 players within the industry. So we are talking about an industry that is definitely attracting a lot of investment.
Francis, I've got Ulrich Jobert. He's an economist here at Kruger International, and he wants to join in the discussion. I mean, Ulrich, if you look at this, I mean, we know here in South Africa, cement demand is has been sort of flattish, and it's actually has been slowing down with the decline in growth that we've seen. But at the same time, we've seen the likes of Dangote coming in. Surprise for me is that Dangote didn't look east first.
Yeah, it's interesting, you know. I think if we listen to the remarks made about East Africa, if that market becomes big enough and we see these sort of growth figures, that the international interest will come. And we've seen that in South Africa as well. Although we see the slowdown in the growth at the moment, we know that there's a lot of potential. And I think that one has to be so careful to be competitive all the time. Even in these times where you don't see the competition, you still have to be competitive. In the times when things slow down and the competition is there, that you are still then competitive in that environment, which is more difficult than where you see these boom periods.
Now, in that sense, then, is the competition that's coming out of the East, particularly the Chinese cement exporters, good for the industry? Or are we likely to kill our own?
I always think that competition is good. Because
if you can survive it.
If you can survive it. Because it then means that you've controlled your costs and you're competitive in the sense that you can then deliver to the final consumer at a competitive price.
Now, Francis, where there's, of course, competition and where there's opportunity, you attract all sorts of players. I've just been talking to Ulrich here and asking him about why Dangote, you do know Dangote Cement of Nigeria, why they didn't look at the East African market. But in terms of M&A activity, what sort of outlook do you see for the industry? Are we likely to see the big guys becoming stronger, obviously, to take advantage of the growing opportunities?
Okay, just quickly on Dangote. Dangote definitely has expressed interest in setting up, at the very least, a bagging plant in Tanzania, and then possibly setting up a plant, a full production plant in Tanzania over the next 2 years. In terms of M&A, currently we've seen the industry actually, most of the players willing to grow organically. Again, given that most of our existing players that have been in the industry for the last 10 to 15 years, they still have adequate limestone deposits.
I suppose now
so I think
go on.
So what is going to actually possibly push M&A transactions in the industry within East Africa is possibly the lack of resources, and again the issue of increased competition with imports coming in within the region and also new capacities coming online.
Now in West Africa, when Dangote came to the Nigerian Stock Exchange, we did see volume spiking up there. What kind of activity are we seeing on those that are listed in the East African market? Is there growing interest in the cement sector? Are we seeing volume spiking? Are we seeing the kind of activity that you associate with the growing industry?
Definitely, and if I look at volumes traded for that particular sector, they have been strong for the last 18 months. And we have seen most of the companies in that industry trading at PE multiples of about 16.
And in terms of valuing the sector now, so what would you say? Would you say, given the growth prospects for the industry in the region, those multiples are demanding?
Given what we expect in terms of growth, I don't believe they're demanding. Yes, they seem a bit expensive. Again, on a
16 times is not cheap.
But if you look at the growth that we expect from the industry, if the industry actually delivers even 12% compounded over a period of 3 years, and margins are slightly squeezed because of pricing coming under pressure, then you still expect earnings growth for the industry to remain strong, and probably, if you look at it from that perspective, the multiples are not too expensive.
Now East Africa, of course, is becoming very interesting, not only from the regional integration efforts that we're seeing the growth and development of the East African market, East African community. In addition to that, we've got a new nation potentially coming onto the map, South Sudan. What kind of an impact do you see that having on the region? And for the cement producers particularly, given the underdevelopment that we know is inherent in South Sudan?
I think Southern Sudan will definitely be interesting, not only for the cement industry. All the industries that you're looking at operating within East Africa, it seems like that is the growth story, targeting Southern Sudan. For the cement industry in particular, the biggest issue that the players will face is logistics. Actually getting the product into the market. Again, cement being a bulky product. So initially what we believe will happen is players with capacities closer to the country would have the first advantage. But most of the other players would only try and access that particular market if the prices justify.